Welcome to our, first Thursday. Oops. Apparently we have audio. Whole place. Where did Jack go? So welcome to the first Thursday of February. Wow. That went by fast. Our weekly member call. We're on two platforms here. We are in a closed room environment, which will continue here for another hour and a half with our members. But for a little bit in the beginning here, we are open on a few social areas for the public to kind of get a feel for what this is and what we do. So, and I'm sure you're saying, who are you? Well, I'm sure you're not saying, who are you? Because you wouldn't be sitting here, obviously, if you had some idea, I hope. But I'm Jill DeWitt. This is Steve and Jack Vitale, and we are Land Academy. And this is year 10 of Land Academy. Can't believe it. It is so cool. Not year 10 in the business. No. The gray is real. The gray is real. My gray, hopefully you'll never see it. So, but it's there.
Is it?
Yeah, it's there. But we're so happy to be here and be part of this and helping you, whatever point you are in your land investing career. We're here and happy to help. So, so today is our regular member call. Our members are right now loading us up. Hey, nice job. I see like 5 right now so far in there, in our Q&A, so that they're popping in some questions for us to answer a little bit and some deals for us to look at. But before we get to that, Jack has some industry news and some other, a question to answer and some good stuff here.
Let's get to it
for everybody. Okay, so here is the question of the week that came from the Land Academy community at large. Mauricio wrote, I don't understand why Jack said the active depending number on the regular green test that lower is better. I think if more properties come pending, it's a faster selling area. Can you explain a little bit?
Absolutely, I can explain. In fact, this question came up. Jill and I recorded the 5 episodes of the podcast for whenever it airs in the future, and this came up. So what he's saying is, I thought pending property is good. There's a lot of people are buying property. It's going into pending status. And so why is lower better? And the answer is this. There are 3 or 4 statistics that we utilize in the red, green, yellow test to gauge whether or not an area is a good place to send mail. And one of the statistics is new list to pending. What I want to see, that new list to pending is a ratio. We want to see the percentage low, which means there are more property that go into pending status in the previous month against newly listed property. Less property coming in, more property selling. In the simplest form means there's a higher demand. There's a lot of demand and a less supply, and you want to be among that demand filling the supply. So I understand how it might be confusing. Pending itself, higher is better. But the ratio against it is lower is better.
Yeah, when you think of it like this, I don't want a lot of active properties. I want a lot of pending properties.
Like Jill explained it on the podcast like this.
Yeah.
6 properties came in, newly listed, but 12 properties went out into pending status. There's more properties going out than there are coming in.
Mm-hmm.
I live and die by this.
Exactly.
We live and die by this. Anything lower than 1 to 1, let's say 12 in, 12 out is 1 to 1. You want ideally 6 coming in and 12 going out.
Mm-hmm.
I hope that's clear.
Okay, so coming up next week, of course, we do our regular Land Academy show podcast Monday through Friday. It drops around 2:00 Pacific time, or at 2:00 Pacific time, I should say. Some of you are probably still walking your dogs to that schedule. I know a lot of people that used to do that.
Really?
Yeah. One's named Michael. I remember, like, that was my thing. I'm in Boston, and that's the time I would take this little walk, and I needed when it dropped. I'm like, that's kind of cool. This is a big one. This is really, really, really cool. Next week, I'm going to announce the next 2 advanced training sessions because I think it's really neat. Next week, we are doing every week for Land Academy member, every month, I should say, we do a real high level advanced training. It's taking everything that we're doing and, and then some, instead of redoing a whole thing, whatever, you get this high level monthly training. They're all recorded and shared in a big, beautiful library for you to access as many times as you want, whenever you want, as an active member. So next week, someone from Data Tree is going to come in and answer our questions. I'm pretty excited about this because one of the things I love about Data Tree is the whole advanced search and flex search functionality. I use that all the time. So when I'm doing my due diligence, like I need to see if there's an easement from myself. It's 10 o'clock at night. I can't get anybody on the phone from an escrow company. I'm gonna go get it myself. And so I hope you will attend. That's going to be a good one. And then you can answer questions live of the Data Tree people. What I would like to leak, if it's okay, is in March, we just booked our advanced training. Oh no, that's a different one. I was thinking it's coaching. Oh, okay. It's been a long day.
Welcome to the world of Jill.
I'm getting my groups and things mixed up here. Well, let me tell you what we got going on in March. It's not an advanced training. It's actually it's for people who are doing coaching, the one-on-one coaching. That's what I was going to say. We booked Jack for March and I'm so excited. So if you're thinking about coaching, you might want to get in the month of March to do it too, to even just to test it for a month and see if it pushes you forward. Jack's going to do his review of the country, state by state by state. I love it when he does it. You do that like once a year.
Yep.
In real small environments. And that'll be really awesome. So again, that's our March training, and it's for the personal coaching attendees. So
here's a hint. Florida's an amazing place to buy and sell land. Minnesota, not so much.
Yeah. And he'll share his personal experience. He really just sits and goes state by state. Here's what I know about Alaska. Here's the deals I've done in Hawaii. Here's dream it up. He'll hover and go through the whole country. And again, it's well, that's just for the advanced group, but you could ask live questions or for the, I'm trying to say coaching group. Next Wednesday is another big day because we have the Land Academy ladies call. Hope I see you all there. And for new people, I saw a few people that said, hey, I just joined. I'm so happy to be here. Like, yay. If there's a female part of your organization, like us, like your partner, maybe your sister, maybe, whatever it is.
Maybe your dog's a female.
No. Oh. To join the call. Your dog can't join the call. But if they're involved in your business, they are welcome to join the Land Academy Ladies Call. Please just send a note to support@landacademy.com. Like, hey, I'm the member. My sister is the one that does all my due diligence or my data, who knows what it is, my partners and whatever, and we'll get them in the call. So yes, I know. Sorry, you guys. Well, I'm like, Caesar, weren't you in the coaching? Maybe you were in the coaching. Make sure you get in the coaching for that. Oh, and the ladies call too. Yeah. LA Pro office hours. That's next Thursday. Today we just had our advanced call for the Career Path alumni. That's why my brain's a little fried, but we had some good stuff. And of course, our weekly calls every Thursday.
Yep.
Thank you.
Hey, but my little discussion here about pending.
Mm-hmm. Oh, some states don't list pending status though.
So there's always pending somewhere. So how you get the data, we do the best we can to present this data in the easiest, most comprehensive format as possible. If you're not seeing pending status in some state, it's there. It's the presenter of the data that's not presenting that state for whatever reason. A good example of this is that Texas is a non-disclosure state, so you can't see sold comps in the places that we're all usually get them, but it's there. Mm-hmm. It's there in Data Tree. Each recorder's got it. So you just got to dig a little harder for some of this data.
He said, thank you. So back to, if you want to see some of these trainings, the advanced, unfortunately, is only Career Path alumni. So I can't get you in that group. But the coaching, hit up support@landacademy.com if you want to get in the coaching, especially for March and some of the stuff that we've got coming up. You can turn it on, turn it off every month, by the way. Coaching is not like a 6-month commitment. Again, just do it for a month, see if it pushes your business forward. Save up all your questions for it. You get an hour with somebody one-on-one twice a month. So it is good.
Let's look at some news.
Thank you.
We have full January numbers out. This is what they look like. Median listing prices nationwide year over year are trending or stabilizing, or at least for the short term, just slightly above zero. So that means median listing prices year over year this week ended, let's just call it January ended, are close to zero.
That's today.
Mhm.
It's kind of cool that they're that up to date
Yeah.
now. Well, it's the beginning of the year. On the fourth quarter, may not be so on it.
New listings, it's what we expected. In the beginning of the year, there were a lot more. It's trending downward toward flat, but we'll see what happens next week. I still think there's a lot more new listings happening as long as this number stays positive. And then active listings, there's a hell of a lot more active listings than there were, 25% more than last year. That's pretty flat. What this really means to you is there's just a lot more real estate on the market, which means, and we just got done with well, not done, but we're in the middle of an 8,000 unit mailer, and we have gotten a response to this mailer that I don't recall ever seeing in a good way.
Oh,
Just
yeah.
a tremendous number of people calling us back. In fact, it created a new business model for us, and I'll talk about that in a few minutes, actually right now. We do not need to look at interest rates. They're 7%, and they seem to be sitting there. So I'm going to do a little bit. This came up in the advanced call today. The first Thursday of every month, Jill and I do the Career Path alumni call. So everybody who's been in Career Path is invited, any career path is invited to this call. And we were describing the results of this mailer, and it occurred to me that we have a lot of confidence, Jill and I, in the properties that we're buying. It's a house mailer, not a land mailer, because the rental market is so strong there. So I devised this little analysis called a capitalization rate acquisition model. And this is what it is. Cap rate is what professionals use in the commercial real estate world. It's net operating income over market value, or said in our world, rent that's collected over what you pay for the property. And that's how the world analyzes income producing property, whether it's an office building. This is one of the ways, whether it's an office building, an apartment building, or a house that's rented out. It might be a house, in our case, that we're looking at to purchase, and we're trying to value it as if we create a rental. So this is what you do. This is 85251. This is Old Town Scottsdale. Terrible place to send mail, but I'm using it as an example. In the distant past, Joe and I we still own a lot of rental property in the zip code, but it's dramatic. The prices have dramatically increased there. So when you look at what you can buy in SFR here, how much it costs, the average, and we're going to start from low to high. It starts at about $500,000 or $600,000, and we can tell that rents three-bedroom, two-bath house start at about $2,000. So is this a good place to buy a house on an emotional basis? Because houses are, if you live there, you're emotional, and then convert it to a commercial piece of property. And that's the cap rate model. So if the market commands $2,000 of rent, and you're buying a house for 200 grand, that's $12,000. It's a capitalization rate of 12. 12 is an amazing cap rate.
So
The higher the cap rate, go ahead.
You're saying, but this market was 500,000 or 600,000.
We're going to look at that in a second.
Oh,
You
you're
can
saying
input this stuff.
Okay, you're just kind of giving us numbers to play with.
Yeah.
Okay, got it.
The target has been and always probably will be, not always, a 10 cap. A 10 cap is amazing. That means my rent's $20,000 a year, and I paid $200,000. It's a lot more than you can get in a bank as an interest rate, and all, just against what you how you place money. A 10 cap is a great gauge.
This is the dream scenario.
Dream scenario.
Got it.
A 5 cap, which is real popular right now, because that's about what you can do in passive income and CD models and the thing. I don't want to confuse you, but this rental rate.
Watch my face. If I'm confused,
Oh,
you
really?
know. Yeah.
So it's your
I'll be the gauge. I'll be the gauge. I'll tell you when I'll be the median for the room.
There's a guy in the advanced
Towards the bottom of the room. I'll be confused. Sorry.
The guy in the advanced group bought a mobile home in Southern California. You know, he's been with us for a really long time. His name's Hunter, and sold it for $200,000 to a guy, and he bought it for $100,000. So great, that's excellent. Land economy model, mission accomplished. Buy for $100,000, sell for $200,000. Sold it to a guy who is going to rent it out, is renting it out for $2,000. That guy created a little investment stream at a 12 cap. The world loves 6, 7 cap right now. So the person who created this little rental situation could sell this property and at a 6 cap as a commercial piece of property for $400,000. So the way to analyze this is to find markets where the rents and the acquisition price make sense, like this.
Okay.
If we were forced to, in this case of Scottsdale here, spend $600,000 to generate $2,500 of rent, these are real numbers, we're generating a 5 cap. There's worse things in the world. So just because you send an SFR mailer out and you won't be able to buy for 600 and sell for 1,200 or 1.2 or even $800,000 doesn't mean you can't convert some of these things to rental property. It's a super strong rental market out there by default. I hope that makes sense.
Okay. Yes.
Thank you, Ross. Gross rents are not NOI. However, this is a simple example of what's possible as what we do on the Thursday call. If you want to get into more advanced concepts and definitions, I completely understand that. My first choice would be to teach a PhD level class in capitalization rate. But I would lose half the people here. I appreciate you bringing that up.
Cool.
Same thing, Mark.
Yeah.
Do you see any other let's see here. Okay, good.
Any other new events or things you want to
My point to this very oversimplified presentation is that this can open, we're just so used to buying and selling land, and that's Jill and I do it all the time. When you introduce a super strong rental market like we have right now, it opens possibilities up for new acquisitions.
Why is this coming up? Because we have people, we're 10 years of Land Academy in, and we have a lot of people in our group, especially the all like we met with today, that we're doing all kinds of property types. We're not just doing land now. We're doing houses. We're doing all, dream it up. And we're talking about this stuff. And this needs to be on your thoughts too. When you're sitting with $1 million in the bank, you're going, I need to just place this somehow, which give us 2 years. If you screw it all up, if you put your head down and follow Land Academy, screw it all up for 2 years, you're probably gonna have $1 million in the bank. If you really work at it, you're gonna have a lot more. So that's my point. And then you're gonna go, oh, now I want to have that discussion again because I need to put some money somewhere.
Yep.
That's why this is important.
If we have $1 million laying around and you can collect $5,000 worth of rent a month or 60 grand, it's a 6 cap ish.
Mm-hmm.
The higher these numbers are, the harder it is to get tenants. But once you get them, they stick around.
Yeah.
This is a true story. We bought this house that we're in right now. We live very close to the Mayo Clinic. And so there's a lot of traveling surgeons that need higher end housing. And we collected a ton of rent on it before we actually moved in. Much higher than this, but you can see where this is a great, this can be an amazing, if you have the right tenant, it can be passive income.
True.
It can be a horror freak show too. You get the wrong tenant. We've had both.
And in the wrong state. And some states are on the team of the owner and some states are not on the team of the owner.
You choose a tenant, and you don't choose a tenant based on what they look like or what their car looks like, just because you're a nice person and they never pay $1 and live there for 6 months. Not that that's ever happened to us.
Got it. Cool.
What's
All right.
next here,
Are we gonna
Joe?
close her up and get to questions now? Is there
Yeah.
anything else that you have?
No, it's it.
Okay, got it. All right. Thank you, general public, for joining us. We are now going to close it up for just our members and pivot